All right. Hi, everyone. Welcome to Analyze Your Trade number 213 for August 13th, 2024. We're going to do a full 12 hours of analysis today. So just a reminder, of course, all of these presentations are for educational purposes only. Trading is not suitable for all people. And please consult a financial advisor and only trade with money you can afford to lose. All of these sessions are being recorded individually and will be available on Timing Research as soon as I can get them processed. Also, if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you can find the recordings there as well. So to open the day for us is Matt Timpane of Schaefer'sResearch.com. So I'll go ahead and turn it over to him.
All right, everyone. Good morning. I hope everything is going well for all of you out there. And it's been an eventful few weeks, obviously in the markets here. So I'm going to guess you do have some questions on some tickers. Just a real quick overview here. Do just have the S&P 500 chart up. Let me know if you can see it because it does show that it's not showing on one end here of mine. But as long as you can see it, let me know. We are seeing a little bit of a rebound here right off of the year-to-date anchored VWAP level here. This was something that we kind of thought would happen. It tested it back in April as well. And then we were able to kind of get this move up and higher. So this is something that we've been monitoring. We do have some overhead resistance levels here coming up at around 536 and 540 as well, as some down kind of, moving averages here that and an anchored VWAP from the top candle here. So, and I do believe, if I remember quickly, the call wall is somewhere up here around 540 as well, if we're looking at it from a near-term standpoint. Let's take a look at some of your tickers. I have some ideas too to throw in here if we don't have enough, but let's take a look. So, first one. Craig Biocraft Laboratories. All right, so Craig, so definitely a penny stock here. You're looking for something obviously explosive to the upside. Let's just pull it back, zoom out, see what we can do with this. All right. So year to date, it's actually up 176%. So with anything like this, you're going to have periods where it's going to absolutely explode. And then there's going to be periods where it's going to be in a perpetual, basically downtrend. Not a horrible idea for a penny stock. It is holding the year-to-date anchored VWAP level right here, and you do have the 200-day moving average. It is in a huge kind of range here, so I mean, I wouldn't be surprised even if you did get like a move back down to this 200-day moving average. As you can see, they've already tried to shake year-to-date anchored VWAP out a little bit here on that move down lower. But I mean, for a range trade, if you're really looking at something here, you certainly could get back up to that 15-cent mark here on this penny stock. Obviously, if you see a breakout from that level, zoom back out, you're going to have other levels to take out as you come back up. Obviously, since it was about 50 cents prior, the next level I would look for would be about 19 cents. You even have this kind of anchored VWAP from the high here on this weekly, and that will probably be right around 15 cents. So that would be a big breakout, and then you could see something really kind of get moving off of that from a small cap kind of penny stock perspective. But until then, I would look at it as play it from that 200-day kind of year-to-date anchored VWAP level here. Make sure this level holds around 8.5 cents. That would be your big level. I mean, they definitely could send it down there to kind of try to shake people out intraday. So 8.5 would kind of be around my line in the sand here. But you really want to see closes above 9 cents, 9.92. And then, preferred for this to hold here at 10 cents for a retest of that 15-cent level. On to the next ticker, UHS. All right, Universal Health Services. I kind of like this name. It's a name that not everybody probably has on their radar. I do actually have a few of those to share with you. Let's just take a look at some of the levels here. Pull it out. Oh, sorry. Texting in the chat here. I'll delete those quick. But yeah, I mean, big breakout level. 161 was that huge breakout. You see that we kind of got a little extended here. If you notice that my candles kind of turned to black, it's a combination of RSI, PPI, stochastics, MACD. It's just better kind of for me to look at charts than to have indicator analysis paralysis type of thing. So when it's red, the majority of those indicators are heading lower. When it's green, the majority of those indicators are heading higher. When it's white, you're into extreme oversold type of territory. When it's black, you're into extreme overbought territory. So we see that we kind of got this breakout. You got into this extreme overbought territory, got the pullback to the breakout at 161. Now we're all the way up at 217. Really, you kind of have blue skies here. It's a beautiful looking chart. The one thing I would worry about is that if we do get a correction, you're going to want to look for that pullback to about 190 to the 180 range here. And let's just go in and see what levels we're looking at. So really the first level you'd want to see hold is this kind of gap level here. So we'd want to see 190 hold on that gap if we're going to get a pullback. You got the 50-day exponential kind of down here as well, and you have this anchored VWAP that's kind of coming up here around the round 200 level. Round numbers are huge psychological numbers in stocks, so if you kind of get a move below that, you could probably easily see that 190 in a quick manner, and that's where you maybe look for like a kind of a washout buy to begin with. If you break that level, you'd want to kind of hold off again before adding to this position till probably about 181 here. You have the previous March high, that coincides with those lows right before July earnings. So that's probably your strongest level when looking at the chart, when you're looking for a pullback area to buy into. You also have this kind of uptrending anchored VWAP from the year to date, and then uptrending 200-day exponential as well. So that would be an area that I would really look for. Say we get some volatility in September, or even maybe the end of August here. If this thing really wanted to pull back. Now it's probably, doesn't trade as heavy as some other names. I mean, average daily volume is probably nothing too extraordinary. I mean, look at the last few days, it's only traded about 400,000 shares. Earnings, it was able to produce 2.7 million, 2.76. So, it's going to kind of have a little bit, bigger moves when the volatility really wants to kick into this. Otherwise, it's going to kind of try, kind of a little bit slower manner here. But, on that theme, if we don't have any other tickers in here, so please feel free to put more in here. Those are the levels I'd watch. And if you are looking for, I guess, UHS, a breakout above 218, if you're not into this position, you want to see a close above this 218.5 if you want to get into it, if you're trying to initiate a position. But if you're already in it, good for you. If you're looking to get into a position on pullback, 191.5, and then 182, 181.50. All right, Amazon and Nvidia. All right, we don't have to go to some of the other names. Perfect. Amazon. So Amazon had a big down day. I mean, it's on its earnings call. It's a stock I've loved actually. 2023 for the Money Show, it was one of my top picks. It finished in the top 8 of 2023. So it was the number 8 pick. My other one was MongoDB, which was the number 1 pick for the Money Show in 2023. Just so you know, this year his pick is the main pick was TSM, Taiwan Semiconductor. That's doing quite well. We'll probably look that over. But for Amazon here, we are now below the anchored VWAP, and I do kind of have charts clean here. I don't have a bunch of marked up charts. I wanted to kind of just go through the process with you. So we have this previous February kind of high here earlier in the year that we got this gap up level from, let's actually kind of put that back. There we go. So 172 is kind of where, I see like we could see some resistance on this rebound. You also will have this kind of previous anchored VWAP low that came from November of 2023. And that's going to be right up here, around here, right now, around that 170 mark, as well as that 200-day moving average. This is a position, I think we actually do have a short-term put strike put on this position within our company. But we are just kind of looking for these levels to kind of, maybe get a retest of those lows. If we don't kind of get a re-emergence here of the bull trend. So for me, I really would want to see it above 172 here, for at least to kind of initiate a position. If you haven't caught it on this dip, right? Like if you caught on this dip to this gap and you were able to re-catch the gap, good for you. That's a great kind of catch there. You're going to have to catch it intraday. Things are going to be moving fast. But if you caught that, then I would use this upward trending anchored VWAP level. If you do have TradingView, you can just kind of run one of these as well. I have some autos on here, but here you just run it. And I don't know what this one's set up for, but set up for like high low. See if we have this. Oh yeah, that one's set for low. So set for high low or high low close 3. That way you kind of have a VWAP score for that day, right? Going forward, that's the right way to be doing it. Don't just use low, don't just use the high. But you can use that as your stop zone if you are long Amazon at 163, and then I would look for taking some of those profits as you approach this 200-day up at 170. You might get a push up to 172. You can still hold on to more, obviously, right? Like, just because we might have a short-term put position to play a move back lower doesn't mean that this stock isn't a gem long-term. It really is, and it's back above that 50 moving average there on the weekly. Really what the problem with this is we had Jeff Bezos selling out of a bunch of shares here at this 200 strike level, around 200, kind of coincided with a call wall at the 200 level as well. I mean, if you looked at an options or open interest configuration on the options configuration here, you were seeing just a massive amount of calls up there. I was actually in a position long on it. We kind of bought back here. We're trying to look at getting long here around the 50-day. Obviously, it didn't work out right away. We kind of got this swoosh lower back down to test this gap. So we tried to get in a little early. We thought, hey, maybe we could get a move back to these highs, and then hopefully a breakout and up to about $200 there. But we had to take a little pain for a few days. I believe, let's see, I can actually show you the actual entry day would have been this Monday or this Tuesday, May 28th, for our subscribers. And you had a pain for about a week, and then we were able to kind of resume and carry on higher. And this is in one of the services we're going to highlight kind of later on today. It's a very similar service. So that's the levels there. Let's see, we got NVIDIA. If you do get through 172, actually, I should say, you still have this whole gap to fill. And you do have a downward slope in 50-day. So, I mean, if for some reason you do get a close over 172, it's not out of the question. The next level I'd look at 175. You have this 20-day here, and this year-to-date anchored VWAP. And then you have, 184 there for the gap to fill on the close. But I mean, really start looking at probably getting out around 182, 181, because you have that down sloping 50-day. And we got volatility that could happen this week. We got the Fed lined up. We had the Fed lined up last week. We have CPI this week. And CPI comes out tomorrow. If that is cooler than expected, we could get definitely some volatility. It'll tell us that the Fed is behind the curve. If it comes in hotter than expected, it'll say, hey, the Fed was right. So, volatility can go to the upside and the downside. And we usually get some bouts. I mean, we did get the VIX, over 65. It's usually not straight down. Usually we're going to have some volatility and we'll see some things reemerge. So those are the levels on there. Next one is NVIDIA. So near and dear to my heart, love the semiconductor trade this year. It bounced right where it needed to. All right. So when we got that big vol move the other day, it came down. It tested that breakout level from earlier in the spring in March. This is something, you know, I was looking for myself to put a trade on. You got $95 here. Obviously, it broke lower, but you still had the 200-day and the year-to-date anchored VWAP level. Let's remove that. So now if you are in this trade, that's the level to kind of trade against, right? So, you know, you can't lose money if you got in on that pullback. If you're not in, not a problem. I mean, you can still use that level. It's a little bit, you're going to take a drawdown off of that. But, you know, I could see, you know, hey, we're at this 20-day moving average. We got the 50-day right above it. You know, if we do get some volatility here because of CPI, probably going to get a move back down here at around 95.5 to retest that low. And, you know, could be a great opportunity to try to get in, use that, and then you can use, you know, a clear close below these 200-day and this year-to-date anchored VWAP level around 90. So you can use that, or about 87.5, a close below. You know, that way you have a defined risk level. You don't want to just sit there, buy the position and not have a defined risk level. But we do, you know, I mean, let's drill it down a little bit here. Say we don't get that pullback. We want to see a breakout trade here, right? I mean, it's kind of moving. NVIDIA is one of the better stocks right there. So if we really want to be conservative, we can use the wicks. If we don't, we already broke out on the 65-minute here, you know, on the hourly basis. So, I mean, really, if you're looking for a day trade or swing trade here, maybe just for this week, you know, we're set to open. It looks like around a 111 here. You know, certainly doable. You do have some resistance that you're going to come into around 113, and we know NVIDIA can do that in about a day. So that's a level I would look to take some shares off of if you're just looking for a quick trade. But, and then also pull it out to the wicks. And, you know, we're going to have, you know, that be start at right around a 111. So you got to look for that breakout. You know, it's a little bit risky of a trade, but nothing wrong with kind of looking at it today as, hey, you know, if you're looking for like a real small swing, you can use 108 here as your kind of line in the sand. You know, these previous highs we saw, once we broke these previous highs, we got a volume push here, and now we're reflagging. You know, that kind of puts it in line. My guess would be on the 65-minute, you'll have this 20-day kind of catching up to that level anyways. So that's a nice little area to put a stop out below. You know, 107 probably a good stop region there on a close below that. That way you're not risking a move all the way back to 95 for you. All right, next stock, Google. All right, so Google, obviously it looks like a little bit of a bear flag. And, you know, nothing wrong with that really. Year to date, it's up 16.6%. Retest, you know, of this gap fill here back in April from this earnings. Again, you know, stocks don't go straight up, so it's a logical place for it to come back to and pull down to. Not a bad place still to take a position. If you are looking to trade options short term, probably not the spot, just because we are pulling up against this 10-day moving average. We are pulling up against that former kind of anchored VWAP level as well. And then we have these this level right here from the gap up level around 165, as we can see, back test down here, 164. You know, and then we got these wicks right before we got that big break lower. I believe that was on the lawsuit data, possibly it was. So we got the move lower, but it came down into the 200-day. It came down into that year-to-date anchored VWAP level. So logical place to try a trade, you know, and then, you know, maybe not hold on to it if we get a close below, you know, or exit it the next day if it can't be regained right away. So with Google, if you're not in it, tough spot to take the trade, I would say. You want to see a move above 165. But, you know, if we get a pullback, you know, certainly not out of the question, retake an opportunity here. You know, bears might get kind of excited here if you see this bear flag kind of break down, but you're going to be breaking down right into a bunch of support. So until you get below this 200-day moving average and this 160 level kind of definitively. So I would look for the 200-day and the anchored VWAP to break. And even you might want 155 to break down. It's not really that bearish. I mean, obviously it's been in a beautiful uptrend. Hard to kind of fade that. And then you can actually see, really the next level down is 150. You're going to be at those 2021 highs. You're also going to be at the high where you kind of got the rejection in January 2024 before we got that breakout as well. So, I mean, on the short side, I mean, if you're going to be short, this is going to be something that's extremely short term when you're looking at the short side of the trade. So if you do want to take a short, kind of a head into this resistance level, that might be your best bet. If you're trying to play weakness, you don't really have a lot to work with from 155, 57.5 breakdown level to 150. I mean, you can get something to work in like a week, maybe 2-week time span, but that's not a whole lot. So, I mean, if you are going to take a short position, this would be the spot, and you got your line in the sand. You're right there, 165. Break above 165, close above it. Exit probably the next morning in case you get that fake out move. But other than that, I mean, I would look at this more from the long side and above 165. Move above 165. Yes, you have some overhead resistance here at 168 with the declining 20-day moving average, the declining anchored VWAP from the top, and the declining 50-day. But it is Google as well. So, I mean, you're not going to look at, moving averages and all be all levels here. You will have another level here around 172 to contend with. But, and then once you kind of get above 178, you're going to retest these highs. So those are your levels on Google. 178.5. You're going to come back, retest that gap, I guess, 180, and then, onto the highs. So that's kind of how I would look at Google. Tough short, in my opinion, but, if you do it, this is probably the spot to take that gamble. But, you still have 160 to contend with on the downside. So, all right. PSIG. And hello, thank you for joining. PSIG. All right, so penny stock, not, and I'll say this first and foremost, not the biggest penny stock player. You are going to need to look for momentum. Obviously, extremely oversold. As I said earlier in the beginning, these indicators are RSI, CCI, MACD, stochastics, Wilders. It's just a broad combination. So every single indicator, and I do got to take a cough drop because our household's been a little bit sick, so sorry about that. It's more about the news and data though, with a name like PSIG. If you're gonna play it, obviously you have set a low here around 7 cents. That would be your stop level. A close below that, which could be bad. I mean, it could be 3.5 cents by the close below. That's kind of how you have to look at this, though. That would be your stop level on this trade. Right now, you're playing for a move back, and that's a huge move. I mean, actually, we should probably pull this in. 80 or 70 cents. All right, never mind. I said 7 cents. So 70 cents on the downside. Really kind of if you give up this gap move though, around 143, that is going to be your sign to get out. If you're looking at it from a swing perspective, if you're looking at it from a scalp perspective and to just trade this quickly, you really want to see 250 kind of break out. You can take a shot around 250 on the upside here. This is the previous gap level from that gap down. So be careful with it. It's going to be a tough level to take out. But once you get above 258, 260, I mean, obviously 265, right? So 265, this thing can really start moving. You can get up to about 320 would be the next level. And then obviously you would have about 350. So, I mean, if you're going to play the momentum, that's how I'd look at it. Right now, you're kind of stuck in consolidation. Again, if you're looking to swing, you're going to look to add all the way down to about $1.50. If you're looking just for a real short-term trade, buck 91, buck 90 needs to hold here, these lows. If those lows don't hold, you're probably going to see that lower end of that gap quite quickly. Um, and these things you got to understand are going to move 10, 20%, 30%. They're not for the faint of heart. So, add to your position slowly if this is something you're looking at, to take a trade on a little bit longer term. That's something I learned when trading anything that's super small float and small cap is, especially if I'm trying to swing trade it. I need to be able to add to my position, and you're definitely not putting your full position on to begin with. You want to be able to add tranches to it, and if it goes without you, it goes without you. You got the capital on that you got on, and just kind of be happy with what you're getting out of that, and look on to the next position as well. So, all right, DSG. Again, not a name that obviously trades that much. Uh, let's just see if we can put a line chart on here to make it a little bit better. Yeah, I mean, you got a double bottom going here in this region around $8. Obviously not a name that I don't think we really trade in the United States, but that would be kind of your line in the sand here, $8. It's trading at 8.90 right now. And upside target, you got 13. This is a name that probably doesn't trade a lot on volume due to the candles that I can see, or at least from the data that I have. But yeah, $12, $13, $12, I would look at it as your price target. And then maybe start pulling some off here around $10. If you get that move here in a short-term trade, but you are risking a lot, so it's kind of a one-to-one trade here. Not something I would necessarily take myself, but hey, I mean, you do have it, and if you want to get in, and if you're willing to kind of buy down to about $8 and use that as your level, you could get a little bit better risk reward on that trade then. All right. Oh, DSGX. All right, sorry about that. So that's why that one looked weird. Oh, not hollows. We want regular candles. All right. All right, DSGX. Yeah, I mean, bear flag kind of happening right here. Back above 95, 96. So if you want, I mean, I'm going to guess most of you guys are trying to look at these things from the long side. Very similar to, Google, very similar to a lot of the bigger names. Come down, test that year-to-date anchored VWAP level, and moving higher now. So yes, it's a bear flag, but I think your big level here is 95 if you're trying to trade against it. Break below that 95.5 level, you certainly are going to risk going back down to the lower 90s here. But upside target, I mean, I would first look for 98.5. You got this kind of pivot level. And that's where I would look for the upside target. Obviously, if we get going again, we're above that 50-day. We do have a declining 200-day exponential. My guess is the simple's a little bit higher than that right now. But yeah, that's where I'd probably look to take off the trade. Meta. All right. Pull this back out to 1 day. And actually, let's just look at your DSGX. That's more short term since we were on the hourly there. Yeah, I mean, same thing. That's probably where you're going to want to look to take off the first tranche. If you're looking at the daily, the next level will be the round 100 up here. That's going to be a tough level. So that would be your next target on that. All right, back to Meta. Meta's a name I kind of like. It's been going through some consolidation. We kind of got this move higher here off this breakout. Let's remove that now. Kind of null and void. You're back through it. It's been in a big range. And that's actually kind of been the story for I mean, just a lot of stocks, right? Since we got that early year push, we've kind of been in this big consolidation base range. So once we do finally break out, we're going to get a move. So first level, that we need to really take out was 515. And the next level will be about 530, and then obviously the previous high is at 540. So you are at the top of the range on Meta, but as long as you're holding this 515 range, you still have plenty of upside here. I do think this might be one of the names that breaks out. So say we kind of, history is August, obviously during election years, extremely bullish. Hasn't been this year. When looking back at data, some of the things that I've seen is when we do actually get that early August flush out, August usually ends the month on an uptick, right, into September. And then that kind of depends. September is a wishy-washy month. A lot of the times we kind of see, the fall off for that Q3 October volatility. That really kind of begins usually around mid-September, past OPEX. But obviously, if we're already kind of struggling in August, we've seen some flush outs in early September as well. So this September will be interesting. Depends on how August will finish. I do think, though, if the bull market is going to continue into September here, before we start seeing more volatility as we approach the elections in the U.S., Meta is a name that could break out and would be one of the first ones on the radar here for a breakout. Let's look. I do see someone prefer to look at daily charts mostly instead of 1 or 5 minute charts. Is there a reason for that? There is, and honestly, pulling out even. So even if you're trading short term, pulling out to weeklies, to monthlies, to dailies, really kind of helps you know exactly where you are within a trade. Yes, if you are trading on a intraday basis, you're going to be looking at 5 minute charts. But once you start getting the swing trades, you're going to want to start pulling out to 15 minute, 30 minutes, and 65 minutes. So as you can see, even if you look down here at the 15 minute, we're kind of here sitting here just treading water at that 515 level. That 515 level is from the daily. So once we kind of break above 516.5, that's where I would maybe give it a shot if you're looking for midweek move or even an intraday move. You will have 518 to contend with, but if you get through 518, clear sailing to 527 really. It's you got a chance if we get a trend day in the market, good CPI data. This would be a name that would move very quickly to 527 when you are trading on an intraday basis here. I'm just looking at it from more of a swing perspective. A lot of times I do trade on an intraday basis myself a lot, but with what we do at Schaefer's, we are typically looking at swings or at the minimum kind of a 1 week trade time frame. All right, so on to TSM. Yeah, so I hope that helped. That answers your question. So even if you are looking at 1 minute and 5 minutes, please pull out because you're going to see levels that you wouldn't see. And that's one thing I've learned, even pulling out to monthlies and weeklies. There's going to be levels there. Hey, it looks super bearish on a daily chart, but you look at the monthly and you're pulling right into a huge level. And yes, that's from a long time ago, but price has a tendency to have memory. And you're going to see some people that want to take the other side of that trade possibly there. And then that bearish position, it's going to kind of, get blown up because people are going to say, hey, let's buy that, 2018 low, level there on the monthly basis or weekly basis. All right, so TSM, this is a trade actually just traded last week. And what was I seeing there? There was a few things. When we're looking at internals, we also have a lot of sentiment data and things like that. And maybe I should have been pulling some of that up here. But we had like a large put strike kind of position down in this region. I believe it was about 140 and then 150 strikes, if I remember correctly, as we came into the week for August expiration. This was last week, and this was a 1 week trade. So recommendation came out Monday morning. Obviously, we got this huge, big kind of back and fill here type of trade where we got this huge move lower in the pre-market and into the early morning session, and then we got this huge move back. But the reason why I like the trade was because of the levels. So even though we're making a huge outsized move that day, it's definitely a position that you want to look at taking. If we would have closed below the 200-day moving average, maybe the next day you exit the position, save the premium that you have if you're trading options like we were. And we were trading 85 deltas, so we weren't trading anything crazy out of the money. And why did I like it though? We were right here at this previous gap level. 145 was right there when we came into the weekend. I liked the level. You had the year-to-date anchored VWAP. And then for protection, if you did get that move lower, you had the 200-day moving average. You got to always kind of think that, hey, we might get a move lower and a bounce. And then you had the gap fill level there as well. And it was really a 5-day trade. And all I was looking for was a move up to the 50-day moving average. Obviously now we kind of got a little bit more than that into Monday, and we even got it into Friday. So it's a nice position. This is something, like I said, again, something I've liked long term. It was my Money Show 2024 pick. Why did I like that? I mean, to begin with, we saw the semi trade coming back. Obviously, Nvidia was kind of a catalyst to this. I thought TSM was a laggard. TSM, everybody, a lot of people need to use TSM for their fabs and their chips. I thought they've kind of been lagging into this AI trade, and fundamentally they were cheap. And if this AI trade was really going to take off, it was eventually going to pull it into TSM. Now it's even exceeded my expectations. I thought by mid-year, we saw options positioning going into July and August around 140, and then I believe there was like 120 strikes, if I remember correctly, from my December write-up. It's obviously exceeded that. What was it? January 8th, right there. Yeah. So first week, January 2nd, it's around $100. We already had nearly 100% move out of the stock for the year. And my expectations were, conservative, 140, 150 back to these previous highs on 2021 and 2022. And that was kind of the conservative take. Now we got that test, it, kind of failed, and then pulled back here. But look at what keeps holding throughout most of this year. Year-to-date anchored VWAP. Something that Brian Shannon does, if you want to learn more about that. But it's something that I follow on the desk. I think it's a great indicator. Tells you where the majority of people are positioned throughout time, throughout this year. So it's a big level. But right now we are bumping up against 170.5 on TSM. So we do have a level here of resistance, I would say. And look at moving averages are telling you to buy, but putting a new position here, a little bit dangerous. You want to be able to put these positions on near an area of support, something to trade against. Right here, even though the moving averages are starting to curl, it's a little bit dangerous. You want to see a move back above 170.5. If you do get that move back above 170.5, then you're going to look for 175 to get taken out. So that would be your next area that you'd look for, 175, 175.5. And then if that level can get taken out, you have a chance to start trying to fill that gap, 183, 185. It's always in the step process when you're looking at trades and you start pulling it down into intraday basis. Even you're looking at steps to take out. One of those steps can always kind of take a turn, and then you're gonna have a trade moving backwards. What is that metric? Not sure what that metric is. So if you could be a little bit more descriptive, that would be great. Quickly, we will just put up our offer here for everybody that's participating today. So some of the swing trades that we do, Power Trend is one of the greatest services that we have. It's 227% portfolio returns over the last 12 months. It averages 4 simple put or call buy alerts every month. And then it's, precision timed entries and exit instructions that are sent to you. All trades can be delivered via email or SMS. And then profit target of 150 to 200% on every trade. So these are options trades. And then typically from Power Trend, I know how we're looking at puts and calls. They are going to be a little bit different on time frames a little bit. Just so you're aware, it can be anywhere up to 6 months on the trade, right? But a lot of the times with puts, we're looking for fast moves. So you're going to get anywhere from like a 45 to a 60 days to expiration on this. So, and then on the call side, it typically averages 60 to 90 days. The old adage, right? Escalator up, elevator down. You're going to get that move a little bit quicker on that put side when you're looking at puts, and then since you'll be shorting, and then you're going to be trying to let it play out on the call side a little bit longer. So simply just give us a call 1-800-448-2080 and then mention Power Promo 8. You get $1,000 off a year of the program, or you can text 513-675-0167. I'll try to put it in the chat here after I am done, but that is our promo for all of you, and then we can even kind of look at what trade kind of like that looks like, right? It's just a couple that are on the same kind of concept here. This is a trade I did. It's in a similar service as Power Trend. It's one of our weekend services, but I looked at workday here. We kind of decided to get short here. It was Monday, July 22nd. We put on the 230 September put position. And again, the concept was, hey, 60 days out, kind of the max that we want to look at from a put position, especially in a bull market environment, because we want these to happen fast. And the level that I was looking to trade against was, hey, we had this breakdown here. 230 was kind of the level, right? I didn't want a weekly close above 230. This is a weekend service, so we do close them out on Mondays and open them on Mondays. So anything that would have closed above this 230, we would have just said, hey, let's get out of it, probably for minus 10 or 20% loss in the option. Instead, we're able to stay in this trade despite everything. And we got that final vol move down on Monday there, August 5th. We took this off for like 114%. So exit that morning. All right. So in the chat, what is that metric? It's the anchored VWAP levels. So for me, kind of look at them in a little, I try to use an auto anchored VWAP. So I have an auto anchored VWAP that will take from the highs and take from the most recent kind of lows. And then I run the year to date, which is the pink line on the chart. Let's look at another one of these trades that would have been like in a power trend type trade. I'm just going from the top of my head here. And this was in Options Advisor, so runs a very similar type of concept actually on the daily as well. Down here, we actually had, if I remember correctly, the 252 moving average. So the 12-month moving average, I don't have that on my charts. As you can see, we're getting into extremely oversold territory here as we pull down into it. And then we kind of got this move back up yesterday. They took it for 100% yesterday on this option. That was, I believe, the September 50s. So those are the type of trades that you're going to get in Power Trend. They can happen quick. They can happen fast. They can be slower moving. GE was a name I know that we looked at. We had on earlier in the year in Power Trend. We took it on, I believe it was, this January, February break, and you just kind of had this nice slow grind higher in Power Trend. It was a great trade. GE is not a name I trade too often, but I know the person that was trading it, I mean, that's their kind of stock. It's just a nice slow grind trend higher, and they have a lot of those ideas for you. All right. Any other names? I mean, we can look at some weird, unique names as well. I mean, everybody says, obviously energy has been kind of I believe its energy is flat on the year, right? Last I looked, I think it was 2% maybe. 7%. All right. So 7% now up off those lows. But there's always a bull market somewhere, as they say. Musa is a name. This thing's what, up 42% year to date. I believe year over year when I was looking at this was up 70%. So sometimes looking off the beaten path for stocks, is nothing wrong with that. Musa is $506 a share. Not a lot of people are trading that. Sometimes you have advantages with that. I know people that trade options that love trading stocks that are high dollar amounts because they can trade them. A lot of people can't. So they don't like to see the NVIDIA splits. They don't like to see the MSTR splits. To them, that kind of ruins the trade because it's more institutional driven, and you get a lot more retail names in there. Obviously, we want retail in there, and we want people to be able to participate. But that is the advantage of once you do build up an account, you can trade higher dollar cost names, and you're able to pay for that contract in MSTR when it was at $1,500, where it's very tough for somebody that's just starting out trading that. So there is an advantage in that. They do trade a little bit cleaner when you start going to that. All right, we have another ticker in here, Carvana. This is a name I love to trade, actually. I've traded this many times in short-term services and intermediate-term type of services that we have. So anything from 1 week to really a couple weeks out. It's a name that can move fast. Actually, the last time I really loved this trade was on the breakout here. That's why that was actually there. We had this breakout level, and then you kind of want to get into it a little bit early, maybe play it against the lows. But then once you get through, you got this anchored VWAP here from the top candle as well. If you're trying to trade it on an intraday basis, these are the levels you're going to want to you were wanting to go against was like that 110, 111. And then as soon as it goes, you have moving average expansion here. The reason why I have only these on there is because I'm looking for an expansion for an uptick. And then, the play would have been back to the highs, but you even got more than that. Right now, we are in a nice consolidation here. So closing high, as you can see, on that kind of move higher out of earnings, and that final candle there before we got the consolidation into the short-term downtrend, this is the level it's trying to hold here around 125. And I can pull up quickly some options data on my end here, Carvana. All right, so I'm going to take out August expiration since that ends here in 3 days. Yeah, so kind of open interest balance is a little bit around 125 right now. Your call wall is at 147 once we get through options expiration. So 147 is right about there. So if you are looking at a short-term move, let's pull it down. All right, so kind of a big level right here, just above, right? So 136, we're gonna open at 135 this morning. So really, again, steps. You're gonna want to take steps with this if you're looking to kind of get in. Do have that, so we're gonna probably break out above that downtrend. Again, I like horizontal levels a little bit better. Downtrends work great, but you get a lot of re-breaks and pullbacks to those levels. So if this is something like, say you want to take a day trade on, your first level on the upside, you're going to open at 135. You're going to have your shorter term moving averages turning higher here. You still haven't broken a downtrend, right? So that was your whoosh lower. Well, you kind of did break it actually. Maybe not use that. That is an outsized candle. So you did kind of break down. So you got to really kind of get through. I mean, you could open at a pretty dangerous spot here, 135, 137. 136 even. So I mean, you're trading right into resistance on this open. So you're gonna want to wait to see that taken out. And for me, you'd at least want to see a close above 137 and then use that level um, to really try to see if you're going to get a move. And then again, you're going to be taking steps. What do you have? I mean, you have a move up to 138. That's day trade territory. That's not long term. You have a move to about 139. If you want to take a swing at this, the real next level, and as much as it probably pains people to say, if you want to take a swing on strength, that's above 139. If you want to wait for a swing, you do have this bear flag here when you're looking at the 30-minute. Same thing kind of at the 65-minute. Might start looking at dipping your toes in around that 200 moving average on the 65. But again, better around 125, and then you use that as your line in the sand. So, for me, it'd be really tough to swing this here. You could day trade it, but you got so many levels of resistance. You'd rather want to wait for this to just clear that 139 level. That way, at least you're kind of above the majority of it. You still have 141 and a half, 140 there. So that, and even there, I mean, if you want to be real conservative, 140, but again, then you got 145. So it is in steps. The better area to buy, obviously, is towards 125 if it can hold that level, and then you have something solid to trade against. TPB, we have just a few minutes left here. Looks like 5 minutes before we move on to the transition and the next presenter. TPB is actually a name that popped up on my radar earlier this summer. You saw this nice little flag retake of the anchored VWAP level here from the high. And then it broke out, right? So kind of got this nice move higher. And now we're in just a consolidation move. A lot of names right now, but that's a good thing. You've seen volatility in the market, and this thing's still holding up. It's still holding a weekly level here. So you had these July 2020 highs that were kind of taken out right here, as well as the May 24 highs that it coincided with. So as long as you hold 34.50, if you're trying to swing this, you certainly got upside. And that's why it kind of popped up with my name. I remember trading this back, and when I saw the name, I was like, oh, I remember trading this when pot stocks were doing really well. I believe Turning Point Brands, right? I mean, they have like Zigzag. They own Zigzag, I believe, rolling papers. So those are your levels if you're looking at trying to get this thing longer term. 42.30 would be a level that, hey, you can start seeing some resistance here. But if we get through 42 and a half here, your upside is about 55, 54 and a quarter. Start looking at start taking some off around 53. And then, hey, you never know. I mean, you can always get that breakout. You don't want to leave yourself, with nothing in the position, but, not a bad position. So as long as you hold these previous highs here, I'd probably try to stay long this name. I wouldn't short this name until you break at least below 35 or 34 and a half. So certainly a name that's in a nice uptrend. And like I said, you have a decent risk reward. If you got in on the vol when we got a test down to that 50-day, you're in a really good position here. If you want, you can always, take some off. You're at these previous highs, but it's a position that is worth holding on to if you're swinging it from a stock perspective. You have time. 34 and a half is a nice level to kind of trade against there on the downside. You can also trade it against break even, obviously, if you're there. But 34 and a half is where I'd look. Obviously, if we get below 35 in that 50-day moving average, you're going to start getting into danger territory. We have 2 minutes here. Quick name, PLTR. Since it was on my list of names, it is kind of breaking out. Pull it back here. You're going to see this is actually a really big level when you look at it from a weekly standpoint, right? So this is why you kind of got that volume in the name on top of the news catalyst. But once you got this move back above 29, that's why you kind of got these surges here, right? not just because of earnings and the news that came out on it, but because you're breaking a huge weekly level that now has the potential to go back and test 38, 40. I mean, so that's why you got a lot of people coming in there, and that would be the level that you would want to use against. There is that 29 level as a level to trade against here in PLTR. Take it off below that level, use that as your stop, and then if you want, like I said, on the long side, you really have kind of green skies. All right, everyone. It does appear that we are approaching the end of this. It is 8:56 and we have 1 minute left. So I'd just like to thank all of you for joining me today. Feel free to come over to Schaefer's and take a look at what we do. Take a look at that promo that we put up earlier. Hopefully you took a picture. If not, I'll put the phone number in. Oh, somebody already put it in. Thank you, Katie. Put it into the chat. So we'd love to trade alongside of you, and have a good one, everyone.